Welcome back, everyone, to another one-on-one with Jerry Hall. Today's conversation is with Morgan Creek Digital's very own Anthony Pompliano. Those of us on Twitter know him as Pomp. Now, this is not going to be an adversarial conversation. I personally have a deep respect for Anthony and what he's trying to do with Morgan Creek Digital. However, we're going to talk about tribalism. You know, I am anti-tribalism, and I think after hearing this conversation, you will get a deeper understanding of where Pomp is coming from when he talks about Bitcoin. It's not about Bitcoin to the exclusion of others. Hear it from his words. That's the best way to go about this. This conversation, we were kind of limited on time. We had to get in at a hard out. So I didn't get to address everything that I wanted to address. And I did write down questions from you, the amazing Twitter community, that I did not get to address. However, some of them are addressed in answers that he gave to other questions. I think if you go through this, you'll find this was an incredible conversation. I very much enjoyed having it, and I hope that you do too. So let's get right to it. Here it comes. Hey, Pomp, thanks for joining me. How are you today?
I'm doing well, man. How are you?
I'm really good. Hey, I wanted to open this with something that might shed a little light on you that not everybody knows, and that would be this question. What are the 3 qualities that you'd like to be remembered for after you've passed?
I don't think that there's 3. There's probably just one, which is just, I think that one of the key things is just having fun. And so when I'm gone, if people just say, man, that guy really lived life and really enjoyed it and had a blast, then that's good enough for me. So I would say it's just that one thing.
Right on. Nothing wrong with having fun. I'll tell you, you came on my radar when I first got into the crypto space and was doing some stuff on YouTube, searching, looking for this, looking for that. I was coming out of the equity markets, semi-retired, found this space, and so I'm looking for info and what does the world say about this stuff. And I found a video from TD Ameritrade, and it was at a TD Ameritrade conference. And it was this young man kind of representing the crypto geek kind of world. And here you are standing next to Mark Yusko in your suits, standing up at the podium. And you guys did about a 14-minute talk about the investor side of looking at crypto. And I found that extremely compelling. I have not been able to find that clip. I wish I could, because you guys brought up some great stuff. I wanted to ask you, being in the traditional capital markets game, but dealing with this emerging asset class, what are the things that you're seeing that are bringing us closer together, these two worlds, and what are the things that you think are still barriers from that integration?
Well, I mean, look, the barriers are plentiful. I think that one of the things is that there is a little bit of a zero-sum game in that for some of the Bitcoin and cryptocurrency and kind of digital asset world to succeed, there's going to be some losses in the traditional world. And so anytime you get something where it says, hey, look, if you don't transition, your current portfolio or your outlook on the world is going to be hurt, people naturally dig their heels in, or some portion of people. And so kind of anytime you have a zero-sum game, that's kind of one downside that prevents some friction. Another thing I think is there's still a lot of work that needs to be done to make things kind of institutional quality. What I mean there is just the largest pools of capital in the world are hyper conservative, right? And so they're looking for kind of a lot of check boxes in terms of they need to have certain types of custodians, they need to have certain types of reporting, they need to have certain regulatory clarity, all of these things that just take time for a market to kind of set, right? And so we don't have those yet, and so there's still a lot of friction there. There's a lot of others, but I would say there's like, 2 of the main ones is just you've got to basically be able to really kind of fit this into an existing framework for them. And a lot of people, I think, in the legacy world are struggling to do that. So checking those boxes kind of helps them do that. And then obviously, anytime you have that zero sum game. Now, on the things that are bringing us closer, one of the biggest things has just been learning for the crypto world to talk in the language of the legacy world, right? And so there's ways to articulate ideas or assets in the crypto language. So if you wanted to basically say something like, hey, Bitcoin is a decentralized asset that's going to become a global reserve currency, and XYZ is going to happen, and blah, 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 whatever. Sure, there's a lot of people in crypto that get super excited about that. But if you want to go into a institutional investor room, for example, and describe it, the things that you're going to have to talk about are much more around kind of a programmatic monetary supply that creates very low levels of correlation and Sharpe ratios, and you just have a different conversation. And so I think that as people have learned, here's how you talk about this thing in their language. It's one, brought people closer together. And then two is just time and performance is the other thing. And people always kind of like, scoff, I think, a little bit at this, but literally there's an advantage to just hearing about an asset and it not disappearing. So somebody who heard about Bitcoin in 2017 probably thought it was a fad. Then in 18, they're like, oh, that thing still hasn't died yet, right? Oh, wait, it went down 80%. Maybe it is dying, right? Then now it's kind of come back. They say, wait, it's still here. Wait, why is it still here, right? And so you get 3, 4, 5, 6, 10 years later, and people just say, well, I better take a look at this because it still hasn't died. And so time is a huge component of it. There's nothing you, I, or anyone else can do to speed up time. You just got to let it play out. And then financial performance, right? One of the big kind of advantages right now is in a time of economic uncertainty and chaos, Bitcoin has been the best performer this year. And so I think there's a lot of people looking around the room saying, why is that? Right? It doesn't necessarily mean that will compel them to act, but at least it gets that on their radar. And it's a data point in a much longer story around non-correlation, outperformance, and ultimately kind of this chaos hedge. And so I think that's kind of, from a framework standpoint, how I think about it. There's lots of nuances in there, but that's kind of how I would sum it up.
Hey, very well said. I'll tell you the thing that probably is the most attractive for me, coming from my background, basically coming from how I thought about investing was pre 2015, right? And the only time I'd heard about Bitcoin before that point was at a poker table. Somebody went broke. They wanted me to lend them some money, and they would give me this Bitcoin thing that I'd never heard of. All right. When you look at a chart, or you look at the performance of the asset over a period of time, so kind of putting on a macro set of glasses here, Bitcoin has an incredible statistical chart that, coming from a capital markets way of evaluating something, is very attractive. I mean, very attractive. And the fact that, yes, it's in an asset class that is extremely, or known to be extremely volatile, to be where it is today, 50% of its all-time high, nothing but sentiment and other value metrics making it look advantageous going forward, especially as you take a look at it relative to monetary policy and what the talking heads say is going to happen for the dollar going forward. I'm curious. With that being said, when Pomp is representing Morgan Creek Digital and you're going to talk to Mon Pa family office, maybe they are dealing with $10 to $100 million in their family kitty, and they want you to give them the skinny. Do you bring in these metrics? What would be like the initial pitch, if I had you come into my family office? Let's say my little office is managing 75 million, and I'm kind of in that typical 60-40-ish old school thing, and it's just not performing. And I have concerns about the dollar and the overvaluation of these markets that are high. How do you pitch me this Morgan Creek Digital?
Look, I think the macro environment pitches itself. I mean, I literally did one of these calls this morning with a guy who, incredibly wealthy. He's got a trust set up. He's got, I don't know, 6, 7 people on the call who kind of help him manage it from a trustee standpoint. These are the most conservative of the most conservative, right? They're not looking at all. And we just walk through 60-40 portfolio is not going to perform like it historically has. We're in a zero rate environment that changes that structure. They've got concerns around the US dollar. They're actually a little bit more extreme in their view than most, I think, in not only just having concerns around hyperinflation, or not really hyperinflation, but just higher levels of inflation. So kind of, you start getting into 3-4% official numbers, you're probably likely in the 10 to 15% in unofficial numbers.
Right.
And kind of how do you just mitigate that damage, all the way to like what happens in a full-on collapse of the dollar type scenario. And what I basically explained to them is just, look, you have to go and you have to look for non-correlated assets, and you have to look for things with asymmetric upside. Right? Like those are the two core components. I don't care what the asset is. I don't care if it's a digital currency. I don't care if it's a stock. I don't care if it's seashells, or whatever you're going to do. But in these environments, that non-correlation, the asymmetric upside provides a lot of benefits. And so when it comes to currencies specifically, the conversation we had today was, 1 to 3% of your assets, moving it from cash into something like Bitcoin. Here's all the benefits to the portfolio from a pure quantitative standpoint, increase in Sharpe ratio, same standard deviation of risk, outperformance over a number of years, blah, 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 whatever. But also on top of that, you then get into a world where you start to say, look, let's say that you are worried about kind of the collapse of a currency. It's not like you just can run to another currency, right? If the global reserve currency falls, like most fiat currencies are going to suffer in line with it, right?
Yeah.
It's kind of the leader of fiats. And so what you have to do is you have to look for something outside the system. And so historically, people have used things like gold or others to kind of get the non-correlated outside the system type exposure. And again, there's very few people who have 50% of their net worth in gold, right? It tends to be a smaller allocation, kind of, again, maybe 1 to 5% type thing. My argument is basically just, look, if that's how you foresee gold's role in your portfolio, I'm going to show you something that is actually more provably scarce, has better metrics that come along with it, and also on a utility basis, stacked up side by side, is superior in terms of portability, divisibility, etc. And so it comes down to just what's your risk profile, what are the goals that you have, what are you optimizing for? But the whole reason why we started walking around saying, get off zero is because I can't tell you what percentage you should actually have, right? For somebody who's older, who's in a more of a wealth preservation mode, maybe 1 to 3% is the right number. For a young guy like me who's in his early 30s, who's in a kind of wealth capture mentality,
Right.
1 to 3% is the wrong number, right? And so it's something much higher than that. And so the way that I think about it is just zero is the wrong number for everybody, right? You should never have zero exposure to the asset. Now, should it be 1% or something much higher? That's for each individual to figure out based on their goals and what they're optimizing for. And so I think that really when you look at the macro environment, it's pretty simple. 2008, 2009, we saw this. Liquidity crisis happens. Every asset sells off. Correlations go to 1. Government steps in. They decide that they're going to print a bunch of money. They're going to manipulate interest rates. As soon as that happens, then what you saw with gold was gold went down 30% in the summer of 08. Government stepped in, and then gold went up 200% and hit an all-time high in 2011. Right? So over a 3-year kind of cycle, if you will, what you saw was liquidity crisis, government intervention, massive quantitative easing, and then you had inflation hedge assets hit all-time highs. Well, what's happening right now? Same exact thing, right? Liquidity crisis in March, government steps in, interventionism economics, they pump a bunch of money into the economy, inflation hedge assets take off. And what I think is going to end up happening here is like we've just started. Right. There was 2 years in 08, 09. We printed hundreds of billions. Now we're printing trillions. Like I anticipate that this is going to go for a while now. And so it all falls back on like a Paul Tudor Jones mentality of, look, inflation hedge assets, in terms of a basket of them are going to do really well in this macro environment. It's just that Bitcoin is the most volatile of those. And so when it goes against you, it's really bad because it's so volatile. It draws down 25, 50%. But when it goes with you, right, you're long and it's going up, it's the most attractive thing in the world. And so I think that's kind of the framework is people are scared of volatility, but they have to remember it goes both ways. And you need volatility to drive returns, right? If you don't have volatility, you actually don't have returns. And so I think that's really the message to people is just, here's a non-correlated asymmetric asset that's hyper volatile, that a macro environment is going to serve as a tailwind. get exposure, and then just sit on your hands, right? Don't try to trade it. Don't try to do anything crazy. Just sit on your hands and let's see what happens.
Right on. So excellent answer. So when my 30,000 mile view, right, is I'm looking at this and I'm seeing companies, well, I'll just bring up micro strategies, taking what I believe it was a very large step, right? 250 billion of their cash treasury balance sheet and allocating it to Bitcoin. I think that said something. Now, my next question would be, so if what you described happens in a call to a family office, now let's talk about you on a call with a PM, right? A portfolio manager, whether it be from Goldman or let's say a big hedge fund or somebody. Is it the same exact talking points, or are now you introducing things that they would be maybe cool to, like that OCC letter, clarification from a regulatory standpoint, things that would allow further innovation to occur?
Yeah, I think there's a lot of people who, they want to understand what I'll call the macro view. There's other people who want to understand the trading view, right? Kind of tell me about price. And then there's other people who are more worried about the structural elements of the industry, right? So this is things like regulation, taxes, all that kind of stuff, and also the companies that are in place to provide this. And so it really is like, what do you want to know, or where is your interest? The best investors are the ones who want to understand all of it, right? So that they want to understand everything from explain to me how taxes and regulation works all the way down to why is today's price what it is and where's it going, right? And so when you see things like the OCC letter, I think that this is all just natural steps in a market kind of maturation process. So when something starts out, whether it's gold or equities or whatever, there's not a lot of regulation. Over time, more regulation comes in, more regulatory clarity comes in, right? Because OCC really didn't change anything. All they did was they clarified, hey, yes, this falls into the assets that you are already okayed to custody. And so that clarification to a lot of people, I think they mentally had said banks can't do this, or banks were hiding behind the fact saying, oh, well, we don't have clarification. But now that the clarification's there, now all of a sudden it's part of the mandate. And so I think that, people really have to understand that, like, that's not going to happen and then Bitcoin's price like doubles overnight, right? That is simply a green light to more people can now use existing infrastructure to custody these assets. You're probably going to see M&A consolidation, where large legacy players will go after crypto companies to kind of accelerate what they're doing. Two is you're going to see internal teams built now to try to go build their own products. And then three is you're going to see some people just left behind, right? There's going to be some legacy banks who just say, we don't think this is going to be a big deal and we're not going to participate in it, right? All three of those are perfectly fine approaches, but what will happen is, again, you're increasing the likelihood for demand. And the beauty of Bitcoin is you have a fixed supply asset. So anytime that you're increasing demand over time with a fixed supply asset, you're going to get these massive increases in price over long periods of time, right? And I think that's what we've historically seen with this asset, and I think it'll continue moving forward. But it's more of just like, each data point is a data point in a long line of kind of momentum. I don't really get caught up on like any one individual thing because yes, the micro strategy, $250 million moving into Bitcoin, and the first publicly traded company to use Bitcoin as a reserve asset, big deal on kind of an individual data point standpoint. Big picture, that doesn't really change anything, right? All it does is like that guy was first, and Michael Sayer now all of a sudden he just took away the career risk for somebody else. Right. And then you can say, okay, the OCC decision, again, taking away a little bit of career risk. So you're like reducing friction and you're just simply taking one step forward. But as we know, on the long journey, one step, kind of linked with another one, eventually get where you're going. And I think that's kind of what we're watching happen right now.
No, excellent answer. So I wanted to ask you something. I had Mark Yusko on the show. This had to be right as COVID was kicking off. So I'd say the beginning of March, I had Mark on the show. And one of the things he brought up, and he talked about Morgan Creek Digital wanting to create a fund that was like the S&P 500 for crypto. And I totally got that. But here's the thing that really, and I wonder how much of this is in the conversation with you folks, and that is the SEC comes out and kind of gives this okay, Bitcoin is not a security, Ethereum is not a security, and that's it. I mean, everything else is subject to getting fined or pulled into the office or whatever. Yet Morgan Creek Digital has this kind of large basket of digital assets in your fund. How do you guys deal with that? You have two of your big guys have clarity. Everybody else, you don't. How do you deal with that? I mean, or do you see something coming that will alleviate that or change that?
Yeah, I think there's a couple of key pieces. So there's a digital asset index fund, right? That's a separate fund. That fund basically is a rules-based vehicle, just like the S&P is. So takes the top 10 market weight averaged kind of cryptocurrencies. It rebalances it monthly, and then it has a couple of extra rules, things around like liquidity requirements, et cetera. And so it removes a couple out of the top 10 that don't meet those standards. And so for us, like, we're not picking individual assets, right? It's not like us saying, oh, this asset is better than that asset. It's a strict rules-based index. And in a world where you kind of are looking at cryptocurrency, right? There's some organizations that are treating these as property. Some are treating them as currencies. Almost all of them are not treating them as securities today, right? There's some questions on an individual kind of asset standpoint, but for the most part, it's either property or currency type assets. And so for us, by picking this rules-based index, that's kind of the goal, right? It's like, we don't want to take a position on any one of these assets, right? One being better than the other. Instead, in that fund, it's simply, if you want index exposure to the market and you believe that the market cap of the top 10 is going to increase, this is a great way to get that exposure. Now, when you look inside some of our other funds that are more like the venture capital type funds, we've got Bitcoin in there, right? And Bitcoin specifically, if you think about, I always tell our LPs, like, think about if I want to own Facebook's search or Facebook's friend graph, I have to buy Facebook stock to get exposure to that friend graph. Or if I want to buy Amazon's AWS business, I actually have to buy Amazon stock to get that. If I want Google's search engine, I have to buy Google stock. Well, I want Bitcoin's transaction network. How do I do that? There's no corporation to buy equity in. So what I have to do is, the only way to get financial exposure to that transaction network, which last year on-chain adjusted transaction volume was more than Apple Pay, Venmo, or PayPal. So this thing's a monster, right? If I want to own part of that product or have exposure to that product, I have to buy Bitcoin itself. So I have to buy the little b Bitcoin, right, to get exposure to big B Bitcoin, the network. And so when you think through that, there's a lot of people who are speculating on price and currency, right? And although we may have our own personal views on that, the thesis for the fund specifically is, I want to own the product and look at it like a venture-like investment, which is, I'm going to make an investment today. I'm not going to trade. I'm not going to use leverage. It's just a buy, hold, long-term view on, is this transaction network going to be more useful in the future, more popular in the future, or is it going to be less? I tend to think that it's only going to continue to increase in popularity and usage. And ultimately, I think that it will grow big enough to rival the Visas and MasterCard transaction networks. And so if you think that way, I would buy equity in a corporation if I could. There's no corporation, it's a decentralized product. So we had to spend a lot of time working with LPs and auditors and all these people, really saying like, hey, how do we get exposure? Well, you got to buy the asset itself. And so I think that's a little bit different than saying, hey, I'm going to go trade an asset or anything like that.
No, I totally get that. And it creates kind of a different paradigm in the capital market structure, because for so long you were able to, well, maybe a better way to state it is, nothing in the capital market structure, as far as equities or even any other instrument, even all the derivatives, are not as vast and as Bitcoin. Digital assets are so much larger than any one element. Like you said, you talked about the payment network, right? It's not just you and I making me buying your hat, right? I really want that Salt Lick hat. You're going to sell it to me for what, 35 Satoshis. Okay, that's a transaction for a good, no problem. We all understand these sorts of value exchange. Other than the US dollar in the United States, that was the only way for you to get other assets is the US dollar. Well, now we have Bitcoin where I can go to a handful of exchanges and I can trade Bitcoin for, let's say, Cardano, because I like this particular protocol, or I like the idea of proof of stake, or whatever. So not only is it this incredible outside the system payment network, it's an in-market structure for everything. I mean, every single exchange on the planet has Bitcoin as the central asset to get any other asset.
Yeah.
And, you know, from what I learned in school, when you have that kind of market set up, it's going to take a lot for that to change. Like, I don't see tomorrow some other asset, even though, like, I love XRP. I think it's fast. I mean, it's wonderful if you've ever had to deal with it on chain, so to speak. I don't see it supplanting Bitcoin as the predominant trading pair for other assets. And as tokenization of things comes into play, Bitcoin's got a bright future just in that segment of the market.
Yeah. I mean, look,
All the other stuff.
Ultimately what happens is it's all about compatibility and usage, right? And so what I always go back to is like the fiat currencies and fiat currency denominated assets compared to Bitcoin and digital assets. I have to, in the legacy world, have an internet connection or a physical location. I have to have an account at an institution. And then I've got to be able to be subject to their transaction challenges. So if I wanted to send money to you right now in another country, right, it could take 2, 3, 4 days for that transaction to settle. I also had to have an account number, right? I had to have all of the things needed to have a bank account to send the wire, to get approved, etc. With digital assets, I just need an internet connection. That's it. I don't need anything else. I just need an internet connection.
Well, an interface app of some sort.
But again, right, is it can be a whole host of different things, but I can even do it, for example, with if you take, let's say, for example, there used to be this really cool product called XDAI. And XDAI, I don't even know if it works anymore, but I used to pull it out of my phone and show people, which was you could go to a URL right now, no sign in, no anything, and I could scan it. Like as soon as you go to the URL, I could scan a QR code and send you money. You had no account, you had no anything anywhere. Now, again, that's not for large amounts and kind of all this kind of stuff, but it was more of like these like burner account type things. And so it was just showing like, here's like the extreme example of what this technology allows. Now, most people are not going to go use that, right? They're going to go sign up for an account somewhere, whatever, but ultimately they're not subject to 2 or 3 day transaction times, right? They're actually able to send things very quickly. And so I think that what you start to see is just, this is a better user experience. Like everyone is looking at this from they're looking at this from a solely finance Wall Street world for the most part, right? In crypto. If you take the finance Wall Street perspective and the Silicon Valley technology perspective, and you overlay those on each other as filters, what you end up finding is that Bitcoin is superior to pretty much anything in the legacy system, right? And
I agree, by the way.
The part to me that I think is kind of funny is there's very few people who actually have the experience on both sides of those perspectives, right? So the technology investing side and also the Wall Street and kind of macro finance world. So if you talk to like most venture capitalists, they'll right out of the gate say, look, I'm not a macro investor. I find it fascinating. It's interesting to me, but like, that's not my thing. If you then go and talk to a bunch of guys on Wall Street, for the most part, most of them will say, I'm not a technology investor, right? I invest in businesses, but I'm not going to go and do early stage technology investing with any level of success better than the guys who already do it, right? And I'm using guys as an interchangeable term here for men and women. But I think that the key piece is there is a group of young people mainly who have perspectives on both sides, right? So if you look at a lot of folks in the Bitcoin community, they are technology enabled just from growing up. They grew up with a phone in their hand, right? The supercomputer thing. And so they grew up kind of digitally native. And then on top of that, what you see is they also have very deep education in money and economics and finance and things like that. And so there's a certain type of person that I think originally was attracted to this, right? In terms of like the structural argument for how could this be really valuable. Um, but now it's widening. Now you're getting way more people, right? And now you're getting the Wall Street people who say, look, I'm not a technology investor, but this is interesting to me. Or you get the technology person who says, I'm not a macro investor, but this is interesting to me. And so what I think ends up happening is, again, going back to time has expired. And because there's been more and more time that's expired, there's been more understanding and education around this. There's more content to consume. There's more people putting their own frameworks on this and kind of sharing, hey, this is how I think about it. And so we're morphing into this world where the lines between Wall Street and Silicon Valley are blending. Like where is the line anymore? It's just there's a gray area now, right? And that gray area, I think it's Jack Dorsey who uses this example. He's like, every economy has a global reserve currency or a native currency for that economy, right? So the Chinese economy has a Chinese currency. The U.S. economy has a U.S. currency, et cetera. Well, what about the internet economy? What's the native currency for the internet economy, right? And so you start to think of it through that lens. You're like, okay, actually, yeah, Bitcoin might be the native currency of the internet economy, right? And so it's kind of all these different perspectives or frameworks. There is no right answer, right? It literally comes down to what is your view of the world, right? And I think that's part of what's so beautiful about Bitcoin is it doesn't force anyone to have a single view of the world, right? You can be a Bitcoin fan and I can be a Bitcoin fan, and we could be a fan for two completely different reasons. But it doesn't mean that the asset is any different, right? It's just what's valuable to you, what's valuable to me, what's my framework, what's your framework. And so I think that like this is an evolving thing. But to your point, people try to put it into buckets. Like everyone wants to like, put a really nice label on it. This is a financial product. This is a technology product. This is a finance investor. This is a, technology. I think all those labels are stupid, frankly, right? And I think that they're kind of, all the lines are blurring and we're headed to a world where, ultimately we're going to find investors who want to make money, right? That's their goal. They don't care if it's in Wall Street, if it's in Silicon Valley. They don't care if it's, with physical goods, digital goods. Like it doesn't matter. They are holistic investors and they kind of evaluate various markets. Is really what the old school macro guys did, right? Is they would go around the world and they didn't care if you were an emerging economy, a US economy. They didn't care if it was oil, lumber, it just didn't matter. They were looking for an area where they had an advantage. I think that's what we're seeing is this kind of new rise or new crop of investor that's doing that in the digital world. Happens to be digital assets is kind of the first foray, but I do think that this is a wedge that eventually will expand across into other things as other assets get digitized, et cetera.
Great answer. So I wanted to let's transition now to kind of more in the crypto space. So crypto Twitter, the thousands of YouTube content creators, and even some of the macro legacy type platforms taking real positions in this digital asset space. I'm speaking specifically of, for instance, your show, but also like Real Vision, So here's a topic that doesn't get talked about a lot. I'm going to label the topic tribalism. Now, I personally will go on record as an anti-tribalist. I'm kind of more of a rising tide can raise all boats. And if the boat that's being raised is solid, it'll stay afloat. And if it isn't, it'll sink, right? You're perceived, and I'm just telling you, this isn't to be negative or adversarial because I have the deepest respect for you, but you're perceived to be a Bitcoin maximalist at the detriment of other incredible value outside of Bitcoin. I have a different take on Pomp. I think you're bright. I think that what you talk about and what you believe what you talk about is a smaller section of what you actually believe. Why don't, from your words, tell us where you sit in this quote unquote tribalism topic? And is there a pro to sticking to Bitcoin as a talking point? Or do you believe that there could be detriments, not including the greater digital asset space as a whole?
I think the short answer is don't listen to what I say, just watch what I do, right? And I've invested in all kinds of stuff across the ecosystem. So whether it's Bitcoin, it's many of our companies support other assets, are building on other assets, right? We can go right at the heart of the issue, which is take the Ethereum community, right? It's laughable to me that they basically have created this this line in the sand, right? So one of the great marketing tactics is to pick an enemy and attack them. Right. And if the enemy turns around and acknowledges you, that gives you some level of credibility. Right. I mean, classic marketing tactic. And so what you see from like the Ethereum community is basically at any time when somebody who is a Bitcoin fan says anything about Ethereum, they immediately just start yelling and screaming maximalist. Right. But if you look at actually from my perspective, there's a number of things that would say, wait a second. We've invested in companies that build on Ethereum. That's all they build on. We invested in a number of companies that they support Ether, right? In many cases, they're actually some of the most popular products that support Ether, right? Take a BlockFi, for example. It's probably done more for Ether than 99% of the Ether maximalists that are running around yelling and screaming at Bitcoin maximalists, right? But to your point, it's all maximalism, right? And so what I end up always saying is, take an easy example. They get really mad when I say Bitcoin was the first application of decentralized finance. Factually, that is true, right? And on top of that, they then get upset when I say, listen, most of DeFi is not decentralized.
Right.
Right? That is, oh my God, you're a Bitcoin maximalist, you're attacking us. But they don't understand. No, I'm actually really interested in this stuff. I believe that the future is decentralized, right? I want to see this come to fruition. But what I think that they're doing is they are making a massive mistake in that they are basically essentially promoting something that's not true, right? It is not decentralized. And we've seen that time and time and time again. And then there's things like what is being called DeFi, right? It's really just financial engineering. There is no innovation going on whatsoever in, let's take the sushi project, right? Where people come in and they're promoting these things like, look at how amazing this is. Look at how amazing this is. And when you actually do the diligence, you realize this is literally just an inflation. It's enriching the people who created something. And then at some point it's going to crash. And it happened, right? And then everyone's like, oh, well, you can't judge it by one project. It's like if you look across the ecosystem, that's happening over and over and over again, right? That doesn't mean
different name.
Of course, it was ICOs in 2017, right? People forget yelling loudly to the point where I was literally booed off stage at conferences saying, these are not good investment opportunities. These are unregistered security sales, right? Like the whole thing. You could just see it happening. And that was like the promise. Now it's this DeFi thing. Again, it's not decentralized in many cases, right? There's an argument to be made that Ethereum itself is not decentralized. That's not an attack against Ethereum. That's me saying it should be decentralized. What can we do to decentralize it, right? And so, it ultimately comes back to, I think that there are a lot of people who, what they are doing is they are promoting projects and they're essentially treating them like projects, right? But the problem is where they are going to find an audience is they're going to unsophisticated, uneducated investors, and they're preying on them. Because the thing is that if you look at the projects that are sustainable, all the big funds are invested in them. Those are sophisticated investors in many cases that have very deep teams to do diligence and kind of do all this stuff. That doesn't mean an individual can't be a sophisticated or an educated investor. Actually, many of the individuals are sophisticated and educated. It just means that on a totality, right? Yeah, exactly. But like on a holistic viewpoint, they are going after people who don't have the ability to do diligence, that aren't asking these questions, et cetera. And so when these bad situations happen, then you see all the larger capital allocators saying, told you, like, of course that was going to happen, right? You then get the pushback, you're a maximalist. What they don't understand is, no, I actually want to invest in decentralized finance. Bitcoin is decentralized finance. It is DeFi, right? It is actually probably the most decentralized aspect of this entire system. What else can we invest in, right? How else can we push this forward? And I think that what we're seeing right now is we're seeing very lazy attempts at creating technology, not products, right? I talk about this all the time. You can create awesome technology, but if it's not productized the right way, no one's going to use it. And so right now we're seeing a lot of like, oh, look what I made the technology do, but it's not a product. It's not usable by anybody. And so until it's usable, it doesn't matter, right? The second thing that you're seeing is you're seeing basically people who are literally creating get rich quick schemes, right? They're creating some sort of thing. They get tokens. They can dump the tokens. They get the money, right? The sushi is a great example where literally somehow the founder walked away with $13 million. How does that happen? It's because the way that the thing is structured was structured in a way for them to be able to do that. And a traditional investor, right? Not even just sophisticated, a traditional investor would have had all kinds of kind of safety nets in terms of vesting, when you can sell, how you can sell, right? All of the normal things to protect the investors would be in place. And so ultimately we're moving to this decentralized world. A lot of that stuff is going to become best practice over a long period of time. In the beginning though, you get all of these little issues. And so what I think people perceive as maximalism is actually the exact opposite, which is it's people saying, I'm investing more money than most of the Ethereum people are in seeing these things try to be successful, right? We've got multiple companies that are built on Ethereum. We want them to be successful, but there's also concerns. So how do we improve this, right? It's the same thing. Like go back to the inflation or the supply issue with Ethereum, right? Where Pierre Rochard was coming out and he was like, well, how many Ether are there? The scariest part of that whole thing was not that they didn't know at first. That's fine, right? Oh, you don't know? Okay, let's go figure it out. Let's solve the problem. It was that they didn't think it was important to know. And so immediately you start saying, wait a second, you have a currency that you have this asset you're claiming as a currency. You're saying ETH is money. But when somebody asks you how many are outstanding in the circulating supply, you can't answer the question. Fine, let's write a script, let's figure it out. But instead to hear people say we're close enough and to be off by, I think it was like hundreds of thousands of Ether in the calculations, it just shows the situation of like, what else should I be asking about that maybe I don't know or that you think is okay or close enough, right? And so to me, it's just, we have one asset in this world that's ready for prime time, right? In the crypto world, there's one asset that's ready for prime time. That's Bitcoin. That is also why the market has determined it to be the most valuable by almost 10x, right? That is the market cap that Bitcoin has achieved compared to everything else. Is head and shoulders above it, 60 something percent, right? Market cap domination. There will be other assets for sure that end up being successful. Which ones they are, when, that's where everyone is kind of speculating on prices and things like that. We have to be okay with holding the other assets to the same standard that the world is holding Bitcoin. And I think that's where people get very upset is the Bitcoin community is ruthless. I mean, outright ruthless. And when you hold other projects up to the same scrutiny, what you find is either one, they don't meet the standard, or two, what you're finding is there's a lot of people who think that it's unfair that they're being held to such a high standard, right? This is the, well, we're close enough type stuff. And so I think that what you ultimately are going to find is in order for things to be long-term sustainable and to actually eclipse the legacy world, you have to be better than them. And so what's the difference between Wells Fargo saying, we're close enough on account numbers, and Ether saying we're close enough on how many Ether exist? It's the same thing. It's bullshit, right? And so the beauty though is Ethereum and Ether, they have the ability to actually know the answer. And so now we're in a place where now they know the answer, right? So I don't look at that as a negative. I look at it as that drove an outcome that makes Ethereum stronger, right? And so it's like, how do we do that for all assets? And by the way, the people in those communities should be doing the same thing for Bitcoin. Like if you don't think Bitcoin is something for you, right? And you think Ethereum or any other asset is for you, you should also be critiquing Bitcoin as well. Right? Because ultimately you're improving it. And if you make the other assets better, then that is a net positive for crypto as an industry. And then that accelerates us getting adoption globally. But I think that this idea of like, oh, you like Bitcoin, and only because you talk about Bitcoin, that means that you're always attacking this other asset and you hate it and you want it to lose. Well, if I really thought Ethereum or Ether was going to zero, I'd short it. Right? Like that, but obviously I'm not doing that. I don't think it's worth zero, right? I actually think that it has the potential to serve a use case that Bitcoin doesn't serve. And so it's like, go double and triple down. I've said this over and over and over again. Like, we should encourage experimentation and innovation. We should double down on the things that these other blockchains can do that Bitcoin doesn't, and then go be the best in the world at it and use the critiques and all of the kind of quality checks and things like that to improve it so that you can end up being this foundational piece of infrastructure, right? And last thing I'll say on this is just Bitcoin's ultimate goal is to become the global reserve currency. In order to do that, you have to be perfect. Not good enough, not, oh, we were perfect every day, but one day. You have to be perfect, right? Because that's what is going to ultimately allow you to rise above everything else.
Well, let's jump on that, because I hear you 100%, but having because I'm so deeply in this space, a statement like that, the first thing that comes to my mind is, okay, that's a great goal. Is it possible? Yes, it's possible. What would be the deterrent? So let's do a little, I'll take a page out of your podcast. Let's play devil's advocate. What are the barriers to that happening? Can I start with a couple and
Sure.
maybe you can rebut them?
Of course.
Okay. Speed of transactions, cost of transactions, and let's just throw in consumption of energy to make those transactions happen.
Well, first of all, the Bitcoin is driving a more efficient world when it comes to energy consumption. There is overwhelming data that suggests majority of the Bitcoin network is run by renewable energy. And on top of that, you're literally facilitating a transition to renewable energy, and there's massive capital investment in renewable energy. So that argument is kind of mute in the standpoint of compare the US dollar to Bitcoin in terms of energy consumption. It's not even close, right? But also what percentage of the energy consumption is renewable energy versus something else that's more wasteful, right? Majority of it is renewable. So I think that's just like a mute point right off of the bat. In terms of transactions, time and cost, there's two pieces. So first of all, money is a belief system. It has nothing to do with the technology, right? In fact, many people would argue that the technology that was inferior ended up being money, right? So if you take gold, for example, super hard to move around. It wasn't divisible, right? It was really hard to actually measure. So you would have to weigh it and things like that. Like, it was a horrible technology, but people believed that it had value. And so it served as money for a long time. Eventually, we said we should improve the technology. And so if you think of gold as layer one, we then created paper claims on the gold. So now you can walk around with paper, right? And you could give people paper, and that was a claim on gold that sat somewhere else. So that made it more efficient. That was kind of a layer two. Then we eventually created electronic and credit and kind of all these other layers on top of it. Now, in 1971, we obviously took ourselves off the gold standard. But what's happening in Bitcoin is the layer one is the most secure, right? Just like gold was super secure. It wasn't very easy to move around. It wasn't super divisible. It had all these like bad things. At the end of the day, if I held that gold and it was real gold, I had all the security. Like, I knew that it was mine. I had it in my possession. Bitcoin is the same thing. Layer one is all about security, right? If you think of it on a spectrum, it's all about security. You're going to build an entire financial system globally on top of this thing. It has to be the most secure computing network in the world, and it is. Then you're going to get a layer two. You're going to start to reduce costs. You're going to start to reduce transaction times. You're going to start to do all this stuff. Layer three, layer four, layer five, all the way on up.
Gotcha.
I get that. Yeah, the part that I think people do is they analyze stuff in a snapshot in time. They don't look at the progression over a long period of time. And then it's just, money is not a technology competition. Every single currency in the world is going to have the same technology. They're all going to be digitized. Digital dollar, digital yen, digital euro, RMB, private currencies like Libra, Bitcoin, like they're all going to have digital currencies. What is the superior monetary policy? And people get really upset when I say this. Bitcoin is a programmatic monetary supply that is a deflationary structure with a disinflationary monetary supply schedule.
Right.
Ethereum is a fiat currency. It is the exact same monetary policy. There's a group of people that make a decision, and that decision can be to increase or decrease the monetary supply as they see fit. Now, they've always made the right decision, right? In terms of they've always decreased the supply. So I would look at that as a good thing. But the fact that it exists that they could increase it based on their own personal beliefs, it's no different than
the Fed.
The central bank, right?
Wow. Interesting. You know, here's the thing, Pomp. There's a lot more to discuss with you. However, you're so busy. You have time constraints, and I absolutely.
I'll give you one more question. What else you got for me?
Well, I'll tell you what. Let me throw this. No. I'm not gonna. And the reason being is because I'm a man of my word. And I said, I'd get you out of here at a hard number. We're going to get you out of here at that hard number. But I want to put it out to you. Would you be willing to come back?
Of course.
When your schedule opens up a little bit, maybe 3-4 months from now, we'll have another one of these chats where we can dive into some of these things, because here's the deal. You, whether you like it or not, you are a face to this asset class, to the world outside of this asset class. People that tune into CNBC and CNN and da-da-da-da-da-da. And my goal is to add value to your experience so that you can give a better, more well-rounded perspective of this to the world that listens to you and watches you. So I'd like to have you back.
Done.
In the future. You're a good man. I don't care what anybody says about you. Congratulations on an incredible get with your new wife. Wow. What an amazing young lady you found there. I think you're a little ahead of your skis, to be perfectly honest with you.
We all know that. No one is fooling me in any other way, and she knows that as well, which is probably healthy for me also.
Right on. So from New York and Costa Rica, thanks for tuning in, everybody. Until next time, Pura Vida.